Today we're talking how to become a millionaire, Barefoot Investor style. So I want to start today's video by just saying I think the goal of becoming a millionaire isn't that ambitious anymore. I think times have changed, and actually achieving $1 million of equity is very achievable for the average Joe. But today I want to talk about one strategy, and that's the strategy outlined in the book The Barefoot Investor by Scott Pape. It's a simple concept, but unfortunately for those that have tuned in to get rich quick, this isn't quite the strategy for you. What this strategy requires is time. And not a short period of time, but a long period of time. But this strategy is, if history repeats itself, practically foolproof. So, what is the strategy and how do you become a millionaire? First of all, I want to talk about the concept of compound interest. To put compound interest simply, if we have $100 today and that $100 earns 10% interest for the year, 10% per annum, year number one, after a year, we'll have $110. Now, year number two, if we earn 10% interest, we're going to earn 10% on that $110. So we're actually going to make $11 interest that year and have $121 by the end of the second year. The third year, we'll make 10% of 121, being $12.10. That'll get added on to the $121. And as you see, each year you will make more and more money on that initial investment of $100. So, how do we take that and turn it into $1 million? Now, that's the trick. Over the past 30 years, according to the Barefoot Investor, the stock market has averaged a 10.8% return. That's including if you're reinvesting in the dividends. So essentially, in the past 30 years, if you took the whole stock market, invested across the board, you would have averaged a 10.8% return. Now, getting back to our strategy of becoming a millionaire, if you were to invest $100 a week, so $100, not a great deal. If you want a reasonable income, if you watch your discretionary spending, I think $100 a week is very, very realistic as an investment goal. So $100 a week, you're investing $5,200 per annum per year. If you were to get a 10% return on this, within 30 years, so a 30-year period of investing $100 a week, you would have invested about $150,000, give or take. Works out to be 150. You do the maths. Here's the math. There's the number. So you've invested about 150,000 over 30 years. But here's the really exciting bit. Thanks to compounding interest, thanks to that 10% return over 30 years, you'll actually have $1,080,000 in your stock account. That seems crazy, but thanks to compounding interest, I'm going to put up a graph. Thanks to compounding interest, that is the reality of a 10% return over 30 years if you invest $100 a week. Now, where this gets really exciting and really crazy in my mind is if you continue to do that for another 10 years, so you invest $100 a week for 40 years, you'll end up with over $3 million. And at a 10% return, on that 40th year, you will make $300,000 on your investment. So compounding interest, crazy concept when you start looking at how much your money can actually grow. But that really gives you an idea of probably the most secure way to become a millionaire. Essentially, nothing's ever guaranteed, but with a high level of certainty, if you invest $100 a year, $100 a week into the stock market, $5,200 a year, within 30 years, if history repeats itself, you will have over $1 million of equity. Now, why don't people do this? Because it's fucking boring. It is an extremely boring way to make money. There's no, it's just not exciting, is it why people don't do it. It takes time, it's a long process, but if you're 30, or if you're 25, let's go on 25. If you're 25 years old right now, you will be 55 and have $1 million plus in your bank if history repeats itself on the stock market, which essentially you're investing in quality businesses. I think it's extremely likely. Now, how do you invest in the stock market to minimize the risk and ensure those sort of returns over the long run? There's two different ways to do it, in my mind. Firstly is to be very, very diligent and spend a lot of time researching the stock market. And it sort of takes away the ease of this plan. The other concept is to buy into listed investment companies or exchange traded funds. So that's LICs or ETFs. What these stocks are is they're actually a fund that buys a portion of the market, or it might buy the whole market. So it might buy the ASX 200, or it might buy a selection of companies. But essentially it's minimizing your risk by buying you a portion of lots of different companies. And if you do your research, not mind-blowing amounts of research, if you do a little bit of research, you will be able to find ETFs and LICs that have extremely low management fees. A good example is the Vanguard ETFs. They offer an extremely low fee and basically will take a big slice of the market. A lot of those ETFs, like the Vanguard ETF, will own over 200 companies. So for $1,000, you could buy 200 different companies. So this is a really good way to spread your risk and ensure that you are getting those reasonable returns over a long period of time. So there you have it. That's my take on the Barefoot Investor's Guide to making $1 million. In my mind, it is relatively low risk. It's just a long-term play. But if you're 25, 30, it means that you'll have $1 million of equity by the time you're 60. Now, as always, guys, I'm not a financial advisor. I'm not a mortgage broker. I am a humble real estate agent. But don't take this advice. Seek your financial planner. This video is just for educational purposes. It's just to entertain and maybe inspire you to go on and do further research on this topic. So thanks for tuning in. If you do like these videos, please subscribe. I'm planning on doing future videos on exchange traded funds and listed investment companies. These videos will give you a really good guide as to exactly what these companies and these traded funds do, and help you invest your money and become financially free sooner.